Good day, traders. This is Richard. Today is October the 22nd, around 9:40 a.m. Pacific time. We're looking at a tabulation of the various futures instruments that may be traded, and they're sorted in the amount of volume that they do in a day. And of course, the day is about 2/3 over. It's a 20, maybe even 3/4 over. It's a 23-hour day. It starts at 3 p.m. Pacific and finishes at 2 p.m. Pacific the next day, from Sunday through Friday. So you can see that the strongest instrument in this list is the ZN, which is the 10-year Treasury note. And the next closest is the NQ, and this is the micro NQ, but we should add in the NQ, because that is a big deal. I mean, that's the big one. Let's see if I can find it here. For some reason it won't add it. Probably got too many in there already. But anyway, you can see that sort again. Now it's all connected, and it readjusted that number. I think that number of 1.7 million was from yesterday, but now it's 2/3 of the way or 3/4 of the way through the day, and we've got 800 on that 10-year note. This 2-year note has about 500,000. And in between is the S&P 500 and the micro 500 S&P, both having about the same amount of transactions. About half the traders are trading full size and half the traders are trading micros. And of course, it is advisable when you first start trading, trade on the simulator. That's why I chose NinjaTrader 15 years ago in 2004 as my platform of choice for futures trading, and I've been with them ever since. I've never looked at another platform. I've tried a few because I needed to do some stock work, and Ninja's mostly futures, and you can do Forex, and there's certain ways you can do stock, but it's designed to day trade futures or Forex on exchange. And these little red and green things are things that show you about whether the day has been bullish or bearish. These red ones are bearish, and these green ones are bullish. And this one right here, oil futures, was bearish half the day, and then it got bullish. And we're going to look at a chart in a minute. But right now, I just wanted to show some of the instruments. Here's the Treasury note. Here's the S&P 500. Here's the Treasury bond, ZB. Here's the Nasdaq. And here's crude oil. There's corn, gold, euro currency, Japanese yen, soybeans, the Dow, the Russell, silver, a micro Dow, the British pound, the Australian dollar, and then the micro Russell, and there's wheat, heating oil, and you see how they're jumping around. Live cattle, another Swiss franc, which is switched because more transactions came through. Here's the 10-year interest rate. Here's the 30-year interest rate. Here's cocoa, coffee, dollar index, cotton. That's cotton. This is coffee, and the dollar index, and then orange juice and sugar. And you notice there's no numbers beside those. That's because I don't buy the data for those. I didn't buy it this month because I don't trade those very actively anymore. I don't need to pay the extra money. Costs you about $150 to get those. But if you want all of these, it only costs you $12 to get one level. You only need one level. You can get a whole row of them, or a whole column of different bids and asks if you want to spend $40. You don't need it. Now, that concludes my discussion on the introduction of what futures we are interested in. Now, we don't trade all of these futures on the same day. We look for extremes, and then we look for buy signals and sell signals. Here was a buy signal right here on crude oil. It started down over here, and we could have sold it right in this circle. We show you the circle. This is a fractal high right here. That's a topping tail. It's a denial signal. In other words, the buyers were denied the opportunity by the sellers to move price higher. And therefore, the baton was passed from the buyers to the sellers. That happens every few hours, every couple of hours on this chart. Here was, and what we're looking at is about a day. It's going to trade. Whoops, I don't want that one there. Let me get rid of that. So we've got about this much time left. We're going to close at 2 o'clock today. We opened over here at 3 o'clock yesterday. This is Tuesday. So now I use ABCD to project where price is going to go. And this I'm going to do it to the upside. This is A, that was B, that's C, and D is up here. So we got right up to that level and went a little higher. So we believe in earnest that we're going to come down. So it's too late in the day to really make any money on crude, micro crude oil, but we could show you how it's done. So I'm going to sell it. I just brought up my chart trader and it won't let me sell it for some reason. So let's see if I can change it to just plain old garden variety CL.
Order filled.
Okay, now I'm filled. I got in with a, let's see what my strategy was. I got in with a stop of about 20 ticks. I'm looking for 80 ticks. Sometimes I only go after 10 ticks, or I only go after 30 ticks. And I go in with a $10 stop. This was a lot more. So it's just a $20 stop. What I mean is a 20-point stop, so $200 stop. Crude oil trades at $10 a tick or $1,000 a point, and there are 100 points in a barrel of oil. There's 100 ticks, $110 ticks make up $1,000. So a barrel of oil holds 1,000 barrels, a rail car on a train track. That holds exactly 1,000 barrel, 1,044 gallon barrels. Now you know a little bit about what we trade, and the price right now is 71.78. And yesterday or earlier today, it was down here at 69. That happened to be support down here right about the pivot. Now I'll talk about the pivots just a little. These floor trader pivots go all the way back to probably the 1920s. Well, actually, yeah, those futures came along in 1859. Futures came along before the stock market did in 1880. So in 1859, just before the Civil War, they established the Chicago Board of Trade. And then it was probably activated sometime around 1870. I don't imagine it operated much during the war. Now, keep in mind that we got about 6 indicators on here. We've got these pivots. These pivots are so important. You see, I've got the support level 3 up there, right there, and down below, I have the support level. This is the support level 3. This is the resistance level. That's the ceiling. This is the floor. Now, during the course of a day, it seldom gets above resistance 2, but it did today. Now we're selling it. Not going my way yet. It should turn green. Now I've got a short on, and it's going against me $40. So I've got a target probably about here if I want to get out today, but it would probably be down here if I want to get out tomorrow. But I don't want to hold overnight because it costs an enormous amount of money. To put this trade on intraday, it costs about $1,000, but to hold overnight, it costs much more, 8,000 to 10,000, maybe 12,000. I don't remember. I don't trade overnight. I'm a day trader. Down here, we have a relative strength indicator. And right now we're overbought. We're way above 80. I'm going to draw a horizontal line to show you 80. That's 81. I'm going to move it down a little bit. And that's $80.25. 80.25. That's as a percentage. And down here is 20. So it's over sold down here at under 20. It's overbought up here over 80. So sell it. So this is an indicator that confirms that I did the right thing by selling it here. Now this is late in the day for oil. We trade between 5 and 7 a.m. daily Pacific time. Okay, now this was a sell signal, but it didn't go far. This was a buy signal and it went way up here. This was a sell signal and it went little ones. This is an A, B, C, D. I'm going to draw that in with our drawing tool. I'm going to draw in A, B, C, and D goes right up to that level. So that was our signal to sell up there because the D ended up there. Okay, now this pivot, primary pivot, is derived by taking yesterday's high and low and close, adding them together and dividing by 3. And then there's some more arithmetic done to get resistance 1 and support 1, and then more arithmetic for resistance 2 and support 2. And then the same thing, a little bit more arithmetic to get the resistance 3 and support 3. And so we trade in between support 1 and resistance 1 generally, but some bullish days it goes further like it did today to that level of 0 on the Fibonacci scale. Now that's another indicator that you need to know to do this business. And there's about 5 Fibonacci levels. There's 78.6, 61.8, and 38.2. Those are the primaries. And the secondaries are the extensions of 127 and 161. And that's, then we've got 100% and 0%. And that's the extremes for the Fibonacci numbers within the frame of the day. Now, if it goes below 100%, it gets down to 127, that means that it was really in a sell mode strongly. Now that can happen over the next 24 hours. We could get down to there. We could even get down to 1618, but we don't expect it to go any farther. And after this move up from down here at 1618, we got all the way up here to 0. Getting back down, 2/3 of that's more likely, somewhere around here. 2/3 to now 2/3 within the range, 2/3 is 61.8. 3/4 is 78.6, and 1/4 is 38.2, and then we have a 50% level. You'll need to learn about those ratios and the A, B, C, D, because AB equals CD every time. Well, let's not say every time, but 95% of the time. That may be an exaggeration. So let's say 87% of the time it works. So when you get this dip like that, after it finds a place to turn again, you expect it to go up that far, like it went up that far. Now, these are the rules that you need to learn. It's going to take you probably 90 days to really get a full handle on these rules that I just talked about during this 10-minute period. Now, I'm not quite finished. Now down here is volume. There's 2 kinds of volume. There's red and green volume. You see that red candle and that green candle. That's discrete volume by time. And this is a 15-minute chart, as you can see up there. And this is what we use to trade. And so all this was a lot of this was a big green one there. That candle right there, and this little candle here over there was green, and then the white and the black are cumulative. So this one adds to that one and gets that one. These 3 add to get that one. Those 4 add to get that one. These 5 add to get that one, and so on. So there's 2 kinds of, and then this tool right here, it tells you the ABCD history, red and green. If it's green, it went up during that period, and if it's red, it went down during that period. So we've got Fibonacci levels, we've got pivot levels, we've got volume, two kinds, one up, down, and two cumulative. And we have price over here and time down here. And that is a chart. And now I see I've got some numbers over here. They're an error. So I'm going to try to fix this by going in here and reloading my template, which is the default. And now those numbers moved over there. Now you can see them over there. That's where you should see them. Okay, now there's several time frames you need to know about. I told you about 15 minutes. That's what we use to trade live. Then there's the 4 hour. That's what we use to forecast over the weekend on Saturday and Sunday. We look at 4 hour charts to anticipate how much move we'll get out of that various instruments we might trade next week. We do about 4 instruments. We watch about 8 instruments, but we forecast out about 4. Usually 3 or 4 of them are the same. We always do oil, we always do gold, we always do the S&P. Sometimes we do the euro, sometimes we do the Treasury bond or the Treasury note. Sometimes we do coffee or cotton, but those are about it. Now there's a lot more, but we try to trade what we know. And I'm a little bit familiar with coffee and a little bit familiar with cotton. And I don't know much about wheat or soybeans or corn. I don't know much about meat. I don't know about hogs and cattle, but we could trade those. I trade what I know. I'm in a trade right now. It's $10 against me. Just when I looked up here a moment ago, it was $20. And I just saw $30 against me. But I think it's going to go down from here, but it doesn't go straight down because there's always some resistance. The wind blows in your face and you're running like crazy to get to where you want to go. And that wind slows you down. In other words, those sellers are, we're selling and those buyers are coming in and getting our face and slowing down the descent. And I prefer to sell over buy because it happens quicker. I get paid quicker. It's like kicking off a rock off the ridge where you look down at the Colorado River from the Grand Canyon heights, right outside of Las Vegas, about 300 miles. You kick that rock off, falls 1,000 feet, maybe 2. I don't know how long how deep it is from that ridge. We can find out and just go to the internet. But anyway, I know it's at least 1,000 feet, and that rock's down there in a picosecond. Maybe it takes 2 or 3 seconds to get down there, but it's moving fast. Depends on the size of the rock. But it takes you all day to walk up. That's like buying, walking up. Take the rock off, that's selling. Doesn't happen that fast when you're selling here, but it's something to think about. So I'm a bear, primarily. I'll sell more vigorously than I'll buy. Doesn't mean I won't buy, like I'm going to buy the Treasury bonds now, okay? So that concludes my introduction to a chart and what we look at on the chart to make our decisions to buy or sell and how long we hold and when we get in, when we get out. And I told you the time of day we are live in a room, and that is the time of day I'm trading. Now, sometimes I hold longer. I'm actively trading during those 2 hours because the ones we trade, oil and gold, primarily silver and the natural gas, those are very active between 5 and 7. And then because those pits are in London, those traders go home and about 10 o'clock in the morning, our time, because they opened at midnight, their time, and now it's 7 o'clock at night there in London. So volume falls off. And when volume falls off, the trading gets moved. That concludes my commentary. My name is Richard Rueb, and I'm available on Zoom Room Radio from 5 a.m. to 7 a.m. Pacific time, 7 days a week, because on Saturday and Sunday, we do weekend research to figure out what the markets may do next week. Thank you for listening. You can reach me by writing zoomroomradio@gmail.com. And we'll invite you into the room to try it out and see if it's useful to you. Thank you.